David Jollie is in the studio as well, and you with Johnson Matthey, the platinum experts. And what did you make of that? What are you thinking of the sector at this stage, and where are we likely to see the price, at least in the next year or so?
Well, it's interesting to hear Ian's thoughts. I think they're quite sort of decisive actions there, and it probably suggests something about the environment we're in. I think it's important to remember that the price was as high as $2,000 an ounce back in July, so we're only in a much lower price environment relatively recently in the last 2 or 3 months. And I think that's come as a pretty big shock to the market. I don't think anyone expected the slide we've seen in the prices. So it's interesting to hear that. And we've just released our data, which are for 2008, and what you can very clearly see is a year of two parts. And the first half of the year, the first two-thirds, is actually pretty good. Even auto demand is actually not bad at all. We see it going up for the year as a whole, both for platinum and palladium, only marginally rising, but rising nonetheless. And China showing very good growth, Europe showing good growth in diesel, North America clearly disappointing. But what you see towards the end of the year is North America dropping off further, Europe dropping off further, and that being a little bit more disappointing sort of last 3-4 months of the year.
David, if one looks at it, there seems to be a battle between sentiment and supply-demand fundamentals at the moment. The biggest deficit, or you're forecasting the biggest deficit in 5 years, yet the price is still well below where we saw it in July.
I think that's right. We're looking at a deficit we think this year of about 240,000 ounces in the platinum market. What you saw very easily early in the year was, I think, two things in maybe the first quarter. You saw the impact of tight fundamentals when you had the closure of Mandelbrot and you had the electricity supply problems. But you then also saw the impact of uncertainty in the market, which drove the price a lot higher as people looked to secure supplies, as they looked to make sure they could still do business if they needed platinum. And the fundamentals drove it then. What you've seen since then, I think, is very clearly it's investors selling out, and they're selling out because they think it's a sensible deal, or because platinum's easy to sell, it's a dollar commodity, or they're forced to sell. So for a whole range of reasons, and we've seen a very large amount of metals sold off. And I think that's hit the price. And on top of that, you have this kind of uncertainty about the economic outlook as well. When that sorts itself out, even if we are in a recession in an awful lot of countries, I think actually the price could show some recovery because the uncertainty has gone out of the market.
And I suppose mines are closing, so production is coming off.
Well, we've said for a forecast for the next 6 months that we think platinum will trade between $700 an ounce and $1,400, and I think that's exactly right. We see some support even at the moment at about between $800 and $900 an ounce. But you see below that, you're seeing strong investment demand in Japan, strong jewellery demand, and other demand in China as well. And you're beginning to see the first signs of supplies being cut. We've seen that 2 American mines shutting down. One temporarily, I think one may be a bit more permanent. We've heard the Lonmin news about some potential sort of cuts to supplies there, and we've heard 1 or 2 other small things. I guess we'll get more clarity on that as we go through, but that suggests that there's a bottom price which, below which it's less attractive for people to certainly expand, to put capex in, maybe even to mine at a certain level. So we're not at a comfortable price at the moment, I think it's fair to say.
From a demand point of view, though, auto catalyst demand must be coming down given the decline in car sales that we're seeing.
The decline in car sales is relatively recent in some of the markets. We see this year it going up, but clearly the second half will be weaker than the first half. And North America is a case in point. Even at the beginning of the year, we thought the market would be 7% down in terms of output of vehicles, and we know now it's going to be something like 15% down. The speculation it could be more than that. So you can certainly see that, and that demand has come off. Industrial demand at the moment relatively strong, but again that might be coming off a bit as debt finance gets harder to get. It's more difficult to construct chemical construction capacity, so forth.